We're going to be going over a few things today. So we're going to start off with first indices, move on to metals, and then we're going to jump straight into Forex, right? So first things first, we need to go over the news. News is very important, right? Red folder news means volatility. Volatility means stronger price action, right? So we're going to go over the news, which is going to be on Forex Factory. Where you at? Where you at, my Forex Factory? It's going to be right over here for you guys. So as you can see on my screen, we have nothing for this evening. Well, actually, yes, we actually do have something for this evening. We have New Zealand dollar, the Kiwi. We have it here for Sunday night. Red folder news from Monday, we have none. We only have one orange folder, that's CHF. Tuesday, we're looking at GBP, British pound. That's red folder news. That is in London session. New York session, an hour before open, we have core PPI. Then we also have another one right after market open, which is Powell. Wow. So be very careful with that one, actually. Then in the evening for Asian session, we have the Aussie dollar. Wednesday, we have USD again. It's an hour right before market open, New York open. That's going to be CPI. Red folder news there. And then in the evening, we have Aussie dollar again. Thursday, we have 1 hour before market open, New York session. Again, unemployment claims USD, red folder news. And then Friday, we don't have any red folder news whatsoever. So jumping on the charts, we're going to start with NASDAQ. So the charts that I use is NASDAQ. We have it on the CME, right? We have these directly from the futures broker, so you can see like the data as it's supposed to be. We're going to start off with the daily, right? So daily, as you can see here, we bounced off this support level here on EZAlgo. And then if you actually saw my previous, right? I did mark out this area. This was a fair value gap over here on the weekly, extended it out. And then that became a nice support area here for this price action to move up. On the daily candle itself, I knew I had a 4-hour fair value gap there as well, where price action was going to react. We have this area right over here. That is a fair value gap here on the 4-hour. I also had this daily fair value gap 50% mark right there, right? Price action didn't tap me in, but it did come right back into this area here. And then it moved right up. The only fair value gap that I have that we could have gotten in would have been here on the second fair value gap. We're going to color this one blue. Let's check you out. And still, no, it just didn't tap into it for some reason. It just, price action just moved way too fast for us. And that's fine, you know? It's perfectly fine. So we'll see in here on the daily. Daily, we tapped into this area. Now it's a support area on EZAlgo. We are bullish until, I mean, we want to break over here. We want to break this all-time high. So we are bullish, even though this is a pretty big pullback. If we draw our OTE fibs, since we are pulling back, this area here where we're sitting at right now is 0.705. We should be looking at shorts, right? If you're looking at premium and discount zones, we are in an extreme premium here. So we should be looking at shorts here and here, right? At 705 and 0.8 due to the fact that it already broke through this 0.62. Then target this fair value gap over here. Or what you could also do is, since we want to identify this area right over here, we can set this as a point of interest for us, right? So this fair value gap here, we're going to target this halfway point. We're going to set our alerts. We're also going to label this as well. This is a daily fair value gap. 50% mark. If you want to set your alerts, right over here, we're looking at 17872.75. These areas are right over here is areas that we want to be looking into a pullback. I'm going to color these actually. Trend line. I'm going to keep it red because I'm going to be looking for shorts. Just to clean that up a little bit. Right? So on the daily, we're looking at this. Most likely price action will pull back into this area here. If we pull out the fibs as well from here, from this bottom point to the highest spot over here, we're going to see that it actually overlaps with the order block that we have here. First entry is going to be 0.5. I don't really enter on the 0.5. I wait for it to actually get into the golden pocket. I have the golden pocket set for 0.62. You might have it for 0.618. I like to round it up. So we have this inside the order block. This might actually go a little bit further up here. In order for this, it might go up here, 0.8. Yeah, we might see it at this market structure over here. But we'll see how the price action plays out. But either way, right now we are at a premium zone. So we're looking for shorts. More likely than not. But we'll see how the price action plays out, because if this continues to go up, breaks through the all-time high, and then that shit is just gonna continue moving and moving and moving. We're gonna be watching this price action very, very carefully, right? We're looking here now on the 4-hour. What do we see on the 4-hour? We're looking left. You see EZAlgo over here, drawing out these resistance levels. Boom, one over here, and then we also have this buy-side liquidity zone here. We're going to remove the EZAlgo SMC here for a moment so we can just get the clean charts and we can just see the price action for what it is. Looking here on the left, I see a fair value gap. Draw that out. This fair value gap overlaps with my resistance line, resistance level. Looks like a really nice solid entry right there. We're going to see how this price action plays out. We might be in a position for a really, really nice short. And as you can see over here, we have to watch out how the price action plays out. Because over here, right, we have a fair value gap that became inverted fair value gap. Price action broke through it, right? This is the candle closure. That's the candle closure as well. Boom, boom. Once you had those two candles close right above the fair value gap 50% mark, now that completely negated our fair value gap. Now it's an inverted fair value gap. So instead of this pushing price action down, dropping substantially, now it's just boom, wicking into that area and pushing it up. So we're going to see how price action develops within that 4-hour time frame. We also have this other fair value gap over here. The price action could actually tap into this area here, or it will continue to dump. But my next target is going to be this as a long, and I'll target this level here, which is my 0.8 as a short. We have to see how this price action develops. On the 4-hour, what do we have that's nearby? Nothing really. We do have this zone right over here, which is very, very interesting. Right, we have different confluences. That 50% mark right there goes through 3 different fair value gaps. This one just right above it. But it looks like a really important zone for us as well. And then if we go left, price action wicks off it. Looks like a really important zone to keep an eye on. Right? So we're going to keep that marked down. This area here, if you can see on my rectangle tool, you're looking at 17,675 and the bottom of it being 17,583. Alrighty, what else do we see on the 4-hour? Not much else happening, but let's draw these fibs. Right? Highest point market structure, which is right there, which is the all-time high. And then if price action breaks down through this market structure, then we're going bearish no matter what. Right? Candle closure right below this just confirms our bearish bias. So let's draw these fibs. This is the highest point. This is the lowest point before the reversal, before the bias change, before the trend change. we're looking to get into these positions right over here. I'll actually remove these now since I have those marked out. And we're going to be looking for bearish entries in these zones here. Now we are pretty bearish. We have a bearish divergence here that just printed out. I wouldn't say blindly get into it, but check out what happened over here, right? You had a bearish divergence there, then price action dumped right over there. So when that happened, let me just show you. Price action was right over here, it was ranging. And then the next morning, it dumped all the way down here, 125 points. So be very, very careful catching that move. But it looks like we are going to dump in the next few hours into the New York session more likely than not. If price action starts developing a little bit faster than others, then it'll probably develop during like the London session. And you'll see like the price action going bearish. I don't usually go into the 1 hour while I'm doing these sessions on Sunday. But let's check out the price action on the 1 hour. We have a resistance area here and one right above it. That's our buy side liquidity. What is our midnight open? Well, we have the 6 p.m. right now, right? This is our 6 p.m. This is where we're starting out. Resistance level here. Then let's see if we see anything else. This is on the 15-minute. Fair value gap here. Broke through, inverted. Fair value gap there. Broke through, inverted. 15-minute zone. I could probably set a limit over right here. I think I will too. Set that up real quick. And a little bit more. That should hold. And this might actually dump pretty hard. Be a little bit. I mean, that's fine. I can target right there. That's a fair value gap right over there. Target it right there. That looks good for me. Guys, it's not a signal. This is just something because I caught it while I'm here with you guys live. Let me go into the NASDAQ minis, right? The micros. I want to set that there. Let's set it over here so I don't blow my account. Set that here real quick. Fair value gap over here. That's going to be my entry. And then these are a lot less leverage. I'm not going to be greedy. I'm going to target 2 to 1. 2 to 1's more than fine. And this one, I actually have to sign out. All right. Let's risk 500. Yeah, we can risk a little bit more. Let's risk 600. Boom. Limit order set. So if price action continues to develop, tap into this 15-minute and then go bearish. We have a bearish divergence printed on the 4 hour. So we identified that we're doing pretty much a retracement now. On the daily, we're bullish, but on the lower time frames, we are bearish. So this could be the early parts of this pullback going into the zone right over here. If I were to take the full take profit here, that's like an 8 to 1. But we're not targeting that. We're targeting like 2 to 1s. So just be very careful with the price action. We had some red folder news this week as well. That might actually just continue dumping. We'll keep an eye on that. But for this area here as a point of entry, 18,300.5. Right? You can even set alerts on that too. Set your alert right there, 18,300.5. We're gonna color you red because we are bearish there. We want that price action to dump. I want you to just tap into that little wick in there, you know, and then just fucking dump. That's what I want you to do. All right, so we identified a couple different levels here. Perfect. Let's move on to gold. For my guys on YouTube live, let me get a yo in the chat. We're going to move on to gold right now. Yo. Moving on to gold futures. Guys, oh my goodness. Remember when I marked this out for you? We went over this last week. You can even go back into my video. We went over this last week. I marked out the price action like that. Pretty much that was my projection, right? Marked out price action is going to come here. Test out this 4-hour resistance zone, which it did. It actually did, right? It tested it out. And then we're looking for this price action to continue dumping into this daily fair value gap. So this might actually ping pong. Tap into here. We're going to watch price action develop. Dump into this daily fair value gap. And then just break this all-time high. I'm going to mark out this all-time high zone. I haven't traded gold on futures, but I think I might. I might actually do that. Daily, what's my daily say? Daily says I have a fair value gap 50% mark right here. And that we're sitting above it. This broke through, but it got rejected. Right? We have to see how price action develops on the lower time frames. But this has broken through, but it has not broken through the actual fair value gap itself. This could still be valid, right? Even though this candle closure happened above the 50% mark, we have to keep a close eye on that. Check it out on the 4-hour. 4-hour, we had the 4-hour fair value gap right over here. That's what we were keeping an eye on. We also have another fair value gap right over here. Now if we draw our fib retracement, draw for the market structure here, down to where we're at. You're going to see this is the 0.62. Then you have the 0.705, and then you have the 0.8. 0.62. Rejection right there. Now price action is moving down. We're going to keep a close eye on this. We also have right here on the 4-hour, bearish divergence just printed. It's about to print 1 hour and 30 minutes. Right? This candle, as long as this candle does not break through this over here, we're looking at a bearish divergence, excuse me. So we're looking for bearish positions. We're looking to go short. So this bearish bias looks like it might actually flow through perfectly. We have a resistance line here by EZAlgo. And we're waiting for this price action to give us a nice entry point in here. And then shorting into the daily fair value gap. Since we have these bearish divergences and we're at these 4-hour fair value gaps, price action is developing on the lower time frame. Let's check this out on the 1 hour. I usually keep it at weekly, daily, and 4-hour for you guys, but I wanted to see the price action at the 1 hour over here. There's a fair value gap there, very small. How would that look with a retracement? That would be the optimal trade entry right there with the fibs. Check you out on the 15-minute. Nothing developing there. Tapped into that, mitigated. Inverted fair value gap. Yep, nothing really showing on the lower time frames. Yeah, just keep an eye on that, guys. Right now we are playing out in a point of interest. We are inside the points of interest. What you can do is set your alerts using EZAlgo. So when the trend flips, you can set an alert. When you have a market structure shift on EZAlgo SMC, you can set an alert. Lower time frames, and you can catch that. These could be points of entry as well to continue with the trend at the bullish bias. But the moment this price action breaks through this market structure down here, we're not bearish, and we're targeting that daily fair value gap. This market structure has to hold right over here. Looks pretty good. I like the way it's developing. I'm gonna keep these OTE fibs here, and then we're gonna move on to silver. I like trading silver actually, because I feel like the price action is a little bit smoother when it comes to like the news and everything like that. Even though it moves the same thing as gold. Ooh, all-time highs over here. Let's mark this all-time high. All-time high on silver, 55.75. That's what it looks like. Yep. That's what it looks like. Where you at? Where you at? This is where we're at. At 28. Imagine if this was like a crypto shitcoin, right? You're looking at like at least a 2x, and then when you have some leverage, oof, gonna take off. That looks good. Check this out. Daily, we have a fair value gap. We have a market structure shift. This fair value gap is supposed to be like the optimal point of entry when we're looking for trading with the trend. Trading with the trend on the higher time frame, we are bullish. That looks like a beautiful point of entry right there. That is a POI, right? Market structure shift. Broke through this structure over here. Now we're looking for bullish positions. Tapped into this order block liquidity zone. So now that's been mitigated. So now price action all it has to do is come back into this fair value gap, collect some liquidity, and then just take off and just blast through this market structure here. So what are we gonna do? We're gonna identify this area here, this fair value gap. We're gonna set an alert. Alert is set at 28.005, but you can just round it up. 28 is fine. Right, and then we're gonna also label this. I want you all to label this, get in the habit. Daily. Fair value gap, 50% mark. Keep it like that. Looks beautiful, right? We have an order block right over here as well. Last bearish candle before the move, market structure shift. You can identify that as well, right? So you can use that as a second DCA. This could actually tap into this tomorrow. Check you out on the 4 hour. What's the 4 hour look like? For me, I kind of don't like that it's so close, but it's on the daily. Because I would rather enter over here. And you can see here a 4 hour fair value gap right over here at 26.955. That fits in with my optimal trade entry. These are my Fibonacci, right? We're going to identify that. And then that one, you can also set a DCA. Set your alerts on this one. We're looking at 26.95. You can round that up too. Round that up to 27. So you can get tapped in. I've been setting these limit orders like so tight and exact pip that I've been getting completely ignored by some of these price action. Some of the price action comes in within like a few ticks. Not even points, a few ticks, right? Like, which is it's a 4 different quarters of ticks make up 1 point. So a 0.25 or a 0.50 of a point is where price action comes into my area, completely avoids me, and then takes off in my direction. So that's why I've been just rounding it up, get a little bit closer. But this one looks like it might actually just come back. Yeah, come into this area and reject. And then here, if price action on the daily comes into here, it's going to touch like somewhere here, the border of this fair value gap in this order block. That's what we're looking for. But I feel more comfortable getting into price action over here versus over here, because this is at a premium zone while this is at a discount zone. I can show you, for example, if I enabled my halfway point, my 0.5, we are above it. We want to be shorting this area and we want to be long in this area. Above 0.5 short, below 0.5 long. Let me take that off the charts. We're moving on to Euro USD. Dun, 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 dun. Euro USD, what'd you do? Euro USD respected this fair value gap incredibly. We identified this on last week's live. Euro USD wicked into it and got rejected off completely. We have a market structure shift here to the upside, but this fair value gap has been tapped into and mitigated. So it looks like we might be changing our bias, right, to bearish. Order block right over here, right below the fair value gap. And then that's a beautiful confluence, right? Order block and fair value gaps next to each other. You want to do the border. You want to set your entry at that border. That's what I started doing because I noticed that that's pretty much a really nice confluence between the two. If they're both right there next to each other, that'll get you a nice tighter entry. And then that gives you a better risk reward as well. Because if you were to put in a halfway point here, you would do it at the bottom of the previous candle, the first one. That causes the fair value gap. And if you were to enter here, right, you have all this from here in the middle to over here that you're able to tap into versus just getting in over here. So moving on to the 4 hour, right, Euro USD. I am bearish because we tapped into that daily fair value gap, got rejected. We have this market structure shift over here with a fair value gap. And then we also have an order block right over here. Huh. Nice. But we have quite a bit going on here on the 4 hour. Check this out. We have this market structure down here, which I want to consider. And then I have this high point here. So market structure here, this is a support level, right? So if price action breaks through that, then we're bearish. So I'm going to use you right over here as my support level. We're going to draw our fibs out to the resistance level, which is that daily fair value gap 50% mark. Now we have price action developing here. This might not actually hold. I will use this level. Check this out. Dun, 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 dun. I might be just a dumbass, but I'm expecting this to be an inverted fair value gap. Why? Why, Caesar? Why do you want an inverted fair value gap? Because we are at an extreme premium. Why will we long it? Right? It's an extreme premium. Over here is this discount zone. We want to long this area here, which we have a fair value gap overlap right there. That's 0.62. And on top of that, that fair value gap overlaps with that order block. This could be our point of entry here for a long. This right here, if this bad boy is going to break through, right? It'll break through, retest, and then dump, and then come right back. Right? That's if price action follows it perfectly. It might actually just do that in one move. We have a lot of red folders news. We have a lot of red folder news this week. So price action might develop like that. So keep an eye on this. Right? Keep a very, very close eye on this because it kind of follows NAS. NAS is bullish, but NAS is doing a retracement. This is going to do a retracement, and then it's going to convert back to bullish, break that market structure. We'll see how price action develops. I like this confluence over here. 0.62 overlaps with the fair value gap, and it's sitting on top of an order block. Nice little confluences right there. That looks good. That looks really good. And then this over here, fair value gap left over after a market structure shift bearish, but higher time frame, we tapped into this daily fair value gap, 50% mark, got rejected nasty. If you were to catch that wick, right, down to just this point here, even though it dumped to over here, right, you could have done the market structure, which is right over here. That's 162 points. But if you were just to go into that fair value gap over here, 114 points. Right, you go to the halfway point of this candle, tap into that, 114 points, 110 points. You can make some significant money just using the daily fair value gaps. So for Euro, this is on futures charts, by the way. We're looking for price action to come to this point of interest right here. All right, we're going to set an alert here. I've been using inverted fair value gaps a lot lately. I've noticed that price action respects it pretty well. And then I'm not mad either when price action doesn't work out the way I want it to. Candle closes below it, and then I just use that as a point of entry for a reverse position. So that's pretty much what I'm expecting this to happen for me as well, because we are an extreme premium here over that 0.5 mark. Let me remove this. It's okay not to have that. And yeah, let's see. What's the daily? Easy oscillator looks good. 4 hour, that's what we're looking at. I'm not going to go down in any lower time frame. Euro USD has been pretty choppy lately. So I'm going to let it do its thing on the higher time frames. That's what we're looking at for right over here. Moving on to GBP. British pound. British pound, I'm expecting this price action to come back into this area here. This is a daily fair value gap. We're looking here on the daily. All right. That's a daily fair value gap over there too. That one tapped into that on Friday. Was it this past Friday? Nah, it was like 2 Fridays ago. Right? This past Friday was the 10th. That was 2 Fridays ago. That was on the 3rd. May the 3rd. But check this out. We're going to draw these fibs. Is this a good point of entry for a long? Drawing from that bottom, right? This bottom area to the top of this wick, which is the market structure. Boom. Beautiful confluence. 0.605 and the 0.705. They overlap with our daily fair value gap. On top of that, this fair value gap is overlapping this order block too. Nice little confluence there. 3 different confluences. 4. You want to consider it 4. You have EZAlgo providing this resistance area. So you have 4 confluences. You have an extreme discount zone. That's 1. You have my OTE fibs overlapping. I have 2 of them on that. That's 2. You have a fair value gap sitting on top of an order block. That's 3. Right? And you are an extreme discount. 4 different confluences right there. Targeting this daily fair value gap over here. That's what we're going to be targeting. That's a 2.65 to 1 ratio. Right? So I could actually set a limit order there. Should I? I should. That's free money. I'm doing it. Set that limit order. Risk. Massive risk. Boom. 1 unit. Do your thing. I'm still getting used to like all this stuff on futures. I used to be a Forex trader. I think I'm gonna have to use like micros or minis, whatever it's called. Yeah, micros for Forex, because these are huge position sizes. But yeah, that's gonna be massive when that plays out. And actually, I'm gonna edit that position entry because I want it to be exactly at where the order block's at. I want it as tight as possible. Tight. Order block right over here. Drops my risk to reward by a good chunky chunk. Right? Order block right there with the fair value gap. Boom. I might even savagely increase it. Boom. All right, we'll let that play out. Anyways, moving on. We're going to JPY, USD, JPY, USD. All right, looks like we are doing a retracement. We're sitting right above this order block over here. We have these 2 different fair value gaps over here, but it's way too close to the price action for what it's doing. This is the real move down here, right? Bearish move. We're looking for entries, right, into the bearish position. And it looks like price action is already retracing. We're going to adjust this Fibonacci. Lock that in. Fair value gap over here. Also overlapping with a resistance zone by EZAlgo. Right? 3 confluences right here. Fair value gap after a market structure shift. That's 1. Optimal trade entries. We're at an extreme premium. We're trying to short it. That's 2. EZAlgo resistance level. That's 3. That's overlapping right over here. This looks good for me. Set your alerts here. 0.0067630. We're going to be looking to short that right there. Continue with the trend. Right? And then probably target this market structure low over here. Right? Price action here. Boom. Boom. In a perfect world, we're looking at that on the daily. What's the 4-hour look like? Yeah, 4-hour looks like pretty choppy. We have a fair value gap over here. You can probably enter there. It'll probably tap into that and then come right back up. Remember, this point right over here was the lowest point. Price action breaks through that and closes. We are extremely bearish after that. So we're going to draw our optimal trade entry fibs. Bottom of this, top of that. See if there's confluences. and there is. 0.62 overlaps with this fair value gap here. Price action could tap into here or sit right there on top of that order block and then continuation to the upside. Keep a close eye on that. That's going to be on the 4 hour. I'm not going to go any lower because this price action, we need to give it a little bit of room to breathe. But yeah, this is perfect because it overlaps with my optimal trade entry fibs to the pip, right? To the tick. And it's below the 0.5. We're an extreme discount. We're looking for longs right there. And then when it gets to this level here, we're looking for shorts. And now DXY. How do you look? DXY, DXY, DXY. Right? Chart, trend line, our trend, draw our trend line. We're drawing our trend line. This is a false breakout right here. What a sneaky little, right? DXY was such a sneaky little bastard. I caught this move here. I should have shorted everything else. I caught this by drawing the fibs. Price action was supposed to tap into here and then continue back up for DXY, which is the US dollar. But I didn't react, right? I saw that happening. I drew it right before it happened. I was like 7 in the morning when I was in the charts. Yeah, 7 in the morning, right before this even happened. And then price action developed right after that. I should have just traded it. Yeah, I was here at 7 in the morning. I'm a dummy. And then yeah, I should have just opened a bunch of longs in NASDAQ because I knew that was coming. But it is what it is. So price action developing. Not sure why I drew that line. Anything over here, we're looking for shorts. Anything over here, we're looking for longs. Sitting above this order block over here. There's also a fair value gap over here. All right. So it tapped into this fair value gap. It tapped into that perfect line right there, which is where the order block meets the fair value gap. And it held really well. You have an order block, you have a fair value gap right over here. But it's not going to fall in line with the fair value gaps. Right, that fair value gap is not going to fall in line with like the Fibonacci. Doesn't look good. You're at an extreme premium still. If you enable the 0.5 line, right, you're sitting way above that. That could actually become an inverted. No, it's not going to become. Well, we'll see how price action develops, but I'm not confident in that being a bullish fair value gap. That's going to be pretty much holding it down. So this is going to be our market structure shift to the downside. We're looking for bearish positions here. Let's mark that out. It is at a premium zone, right? That's where we want to be for shorts. We're above the 0.5 line, or we're right over here. Set an alert. 105.498. I'm just setting an alert so I know when that goes off. I'm looking for longs in NASDAQ. I'm looking for longs in gold. I'm looking for longs on all my USD pairs, which right now I have a position open in gold, right? GU, gold, and NAS. But yeah, guys, that's pretty much it. So we have a couple of red folder news coming up for this week. We just marked out a couple of items on the charts, points of interest. We went over a few different Forex pairs, metals, and indices. Well, one indice actually, we went over NAS. I didn't go over US 30. That's fine. We have plenty of market news happening this week. Be very careful with the charts. Make sure to follow all your rules, right? If you need any strategies, we do have a couple strategies inside the Discord that's available with the pro memberships. We have a bunch of users submitted and also ones written by the specific, analysts that are inside the chat. Definitely check those out if you don't really have a strategy. But it's very important to go into trading with the strategy. Make sure to follow your rules and make sure to take time out of your day and try to plan out for the week, right? Reason we do this is to build trader discipline and to also make sure that we're not YOLOing into trades, right? YOLO, you only live once. You're not just jumping into a trade for the hell of it. You're not trying to, catch a falling knife. Once the move is done, it's done, right? So we're trying to make sure that we're trading within the points of interest and we're making sure that we're trying to catch those moves before they happen throughout the week, because we're going to be trying to, you know, jump in those trades at the right point. So instead of making trades happen out of nowhere or forcing trades, we already have a couple areas that were identified. We're going to stick to those areas. We're going to be disciplined traders. We're going to follow rules, and we're going to have a great trading week. So that's it for me, guys. Goodbye for now.